Great, let's get started. Good afternoon and welcome to the virtual masterclass hosted by Avana Capital in collaboration with NOAA by Saint Gobain. I am Srishti Parekh and I will be your moderator for today's session. We're hosting today's masterclass as a part of the Avaana-Startup India Niti Aayog Atal Innovation Mission Grand Challenge for Climate-tech Innovation 2024-2025. This one of its kind initiative aims to identify and support climate tech innovators and startups who are driving transformative innovations in clean technology, sustainable agriculture, deep tech, green manufacturing, etc. The Grand Challenge offers several benefits such as monetary rewards, mentorship from industry leaders, and a chance to showcase at the Startup Mahakumbh, the biggest startup event in India. If you want to be a part of the Grand Challenge, click on the application link that will be shared in the chat. And for any latest updates, don't forget to follow Avana Capital on LinkedIn. Coming back to today's masterclass, the topic of today's session is decoding corporate venture capital perspective of solutions for the built environment in India. This session will delve into how startups in the built environment can navigate the world of corporate venture capital, investments, and partnerships. This session will address questions such as how do CVCs identify the right startups, what factors drive strategic investments, and how can startups effectively leverage these opportunities. To ensure a smooth session, I will request everybody to stay on mute. To make this more interactive, I will request all participants to drop in their questions in the chat box and not unmute themselves. I will be collating all questions from the chat box and moderating the session. Our speaker for today is Mr. Tejas Roy. Tejas is an external ventures manager at NOAA by Saint Gobain and heads the corporate venture capital function for Saint Gobain in India. He has over 20 years of experience in engineering, product management, strategy, business development, and corporate venture capital. Tejas, thank you so much for joining us today. Over to you.
Thanks, Shishti. Good afternoon, everyone. Big thanks to Avaana Capital for hosting these series of masterclasses. Very happy to be speaking here and share from our perspective, from the corporate venture capital perspective, how we look at startups and how we approach startup engagement. I hope what I have to say is useful to some of you. Happy to connect on LinkedIn even after the program if you'd like to get to know about Saint Gobain's startup engagement program. Let me just quickly share. Please confirm if you can see my slides.
Yes, I can see it.
Excellent. All right, let's get started. I'll start by introducing my team, that's NOVA. So NOVA is the CVC team inside Saint Gobain. NOVA has been around since 2006, where it was started as more of an external collaborations team, right? So basically looking at who are the organizations that we want to collaborate with, right? And for the first 10 years, it stayed that way. And around about 2015, 2016, we realized that there's a lot more value that we can add to the startup ecosystem, as well as get value ourselves by investing in startups, right? Having more skin in the game, so to say. So we shifted our engagement model to a more of a corporate venture capital investment-driven type model. And since 2016, we've been investing in startups. Currently, we have a portfolio of about 55 plus startups across the world, and then mostly related to some of the other Saint Gobain businesses. Where Nova positions itself is as a bridge between the external world of startups and the internal world of Saint Gobain. It acts to connect stakeholders from both of these worlds and facilitate engagements. The idea is to go beyond conversation of mere acquisition, right? The first question that I usually get or I preemptively answer when I have a discussion with a startup is, are you looking at acquisitions? So acquisitions are a very distant possibility. Nova's focus as a team is on collaboration and investing in startups and identifying areas in which startups and Saint Gobain can be beneficial to each other. In India, I work out of Saint Gobain Research India in the IIT Madras Research Park in Chennai. Saint Gobain Research India is one of 8 transversal R&D labs. So these 8 labs spread across the world, as you see on the map, are constantly talking with each other, exchanging notes, working on different projects. And this allows us access to information and market trends and R&D from across the world, right? At Saint Gobain Research in India, we have representation from all of the business units inside Saint Gobain. It's a great melting pot of every different kind of technology that Saint Gobain works on currently. It's a fantastic environment to be in. Not to say anything about IT Madras Research Park. Again, a melting pot in itself, where you have academia, industry, the startup ecosystem, VCs, the government, all of these stakeholders converging in one point to make really great things happen. In terms of engaging with the ecosystem over the last few years, we've built ourselves a small network of trusted ecosystem partners. This is not an exhaustive list. I highlight a few of our closest partners, but there are many more names in the complete list. In the last year alone, or rather every year, we meet in India, Indian origin startups, upwards of 100 every year, right? Every year we add a dozen. We participate and organize startup events. We have smaller events which are organized out of our office in IT Madras Research Park. And from all of this, we've got 20 active, currently, I think it's a little bit over 20, 20 plus active discussions with different BUs and R&D teams. So I'll come, later on in my presentation, I'll come to how we engage with startups and how we really want to drive this open innovation culture in India. To have a framework for how we engage with startups, we have a set of target areas. As you see, it encompasses most of what Saint Gobain does. We do a lot of work in these areas, but we realize that we can't do everything there is to do. So we look for startups in each of these areas, not just startups, but other partners in each of these areas to accelerate product. Some of these areas are our core businesses: construction technology, sustainable building technology, energy transition, so forth. Some of them are slightly new, digital customer experiences, digital connectivity, but we do a lot of work in this, and we actively engage with organizations in these areas as well. So I'll quickly move on to the topic for today. So the idea for today's masterclass is to give startup founders an idea of what really CVC investing is about, how different it is from traditional VC investing. So I'll start with what strategic investments mean, and then we'll go through the other topics. So coming to strategic investments, it's sort of often misunderstood. Strategic investments immediately triggers thoughts of M&A type discussions and acquisitions. Not the case at all. Strategic investments are, in fact, a way for us to achieve our goals and leverage tools that are available to us. We have a very clear framework to do this. So 4 points, which we use as a compass to navigate this path. Being fully connected with the startup ecosystem, bringing new opportunities and accelerating innovation, collaborating with top startups, moving away from transactional relationships to more partnerships in progress. And 4 is share opportunities for innovation across Saint Gobain, right? So we want to bring these opportunities for the entire group. So these are the guiding principles for our open innovation. And to do this, we have a few ways in which we do it. So being fully connected to the startup ecosystem means that it has to be built on the foundation of collaboration and co-creation, right? So there's a level of trust that is involved when we say we want to engage with the startup ecosystem. There is often a lot of sensitive IP-related matters, and that is where the sort of intangible aspects of trust. You can have all the NDAs that you want, you can have all the service agreements that you want, but if the intangible aspect of trust is missing, it'll fall through. So it's built on the foundations of collaboration and co-creation, and it reflects the strategic priorities of the organization, right? So it's very often we find ourselves in a situation where we come across a really interesting startup but we're not able to engage with them or invest in them because it doesn't match the strategic priorities of Saint Gobain, right? So what we do is we decline the opportunity to invest in them. But what we also do is refer them to other network partners. The word synergy is often, it's become sort of cliche almost now. But what we do is when we see a great startup, like all good VCs and all good CVCs, our immediate instinct is to share it with some of our trusted partners, so that the startup in question gets the best of the opportunities, gets high visibility, and they get to meet their goals that they've set for themselves in the quickest, best way possible. To collaborate with top startups and to move from the transactional mindset to a more of a partnership mindset, we need strong sponsors and champions within the organization. So this shift has happened over a period of time. Every time we meet a new startup and we introduce them to one of our businesses or one of our R&D teams, this aspect of open innovation grows stronger and stronger. So 3 years down the line in India, since we started the Open Innovation program, we have a really strong set of champions who are able to engage with startups and very quickly, without wasting a lot of time of the startups, come to a decision whether we're able to engage with them now or in the future or not at all, right? So we take quick decisions and try to move things as quickly as possible. Of course, being a large organizations, we can't match the agility of a traditional VC or a startup, but no, that is what it is. And last is we rely on a robust network of partners to navigate the open innovation journey. We have, you saw in the previous slide, a small collection of logos. These are our network of partners on whom we rely to source high quality startups and also refer back high quality startups. So it's always a game of not really a game of it's an aspect of give and take within the network. One has to be careful not just to take. It's also about bringing high quality startups to the network, right? Yeah. So this is how we look for startups. A few more questions that we ask ourselves when we're interacting with the startups, or to identify what kind of startups do we want to deal with, right? So when it comes to other organizations, we ask the question of how will they enable us to achieve our goals, which are important to us, right? So we look for partners who will share deal flow and investment patterns. And these are, again, not just incubators, accelerators, VCs, or government organizations. I'm surprised by the number of referrals I get from startup founders about other startups, right? They say that, I have a friend, he's got a great idea, he'd like to pitch to you. And a lot of our, I don't have a number for it exactly, but a lot of our deal flow comes from investments from fellow startup founders. When we engage with startups, we also look at, how can we provide insights into emerging technologies and trends? How can we gain insights into emerging technologies and trends? Again, a two-way street. This two-way conversation is really important to us. We've sort of built that culture of listening and speaking. So it always has to be a two-way discussion. How will this organization strengthen our network development? Will it give us access to more great startups? Will they speak favorably about Saint Gobain elsewhere, given Saint Gobain's merits? And how can we de-risk collaboration and investment opportunities by engaging with this startup, right? So these are the questions we ask ourselves. Now, what's in it for the startups, you might be wondering, from Saint Gobain? Beyond just the investment aspect of it, Saint Gobain, an organization like Saint Gobain with its R&D setup, can offer mentorship and technical support. Startups can validate existing data sets, get access to our sales network, have a joint go-to-market, etc. We do organize paid pilots, again, to validate use cases and increase visibility. And all of this could end up in a commercial partnership with Saint Gobain, right? So really where you can see tangible benefits from this open innovation program. I'll come to how CVC investors scout for startups. It's a little bit different from how traditional VCs scout for startups. We follow in their footsteps, but we do some things slightly differently. Many of you will know that there are two ways in which we engage with startups and the startup ecosystem. We have a more structured, a standardized cohort-based approach where we will launch a series of challenge statements. We will refine the challenges, do a deep dive session and analyze the feasibility. We finalize and then we launch a proof of concept project. And then at the end of it, we have a finale where the startups present to the senior leadership inside Saint Gobain, and we then allow the business units to explore commercialization potential with these startups, right? So this is good because it brings a lot of visibility to a startup and the Open Innovation Program. But we don't always wait for a program to start, right? Many of it are at a more mature stage. They don't need the handholding that some earlier stage startups need. So we add all of these into the funnel of ideas that we have, and we match with requirements that our businesses have, and then we quickly launch a proof of concept project, and then we see how fast we can take it to commercial scale, right? So unstructured approach. Each approach has its own benefit. I see a few chats. If it's okay, Ravi, can we take this question maybe at the end of the presentation? If
Yeah,
that's
so
okay.
Tejas, I think we'll just go ahead with the presentation, and at the end, we'll plug in all of these questions.
All right. Sure, great. Thanks, Srishti. All right. So talking a little bit more about our structured program at Saint Gobain Research India, we've had two cohorts that we've completed so far. The third one is underway. Those of you who follow our LinkedIn page, you'll see that we recently called for applications for 12 challenge statements. So we started this in 2022, and we asked our research teams for challenge statements. And we launched this Open Innovation Program, and we were able to reach 300 plus relevant startups. I mean, the reach was much larger, but the applications from relevant startups were 300 plus. We interviewed 50, finalized 10, and out of them, we had 6 proof of concept projects completed, right? The second cohort was launched in, sorry, I think there's a typo when I was copying and pasting. It's October 23 to August 24. I'm sorry for that. So again, we had 10 challenge statements from research teams. Our reach increased. We reached out to more startups, which means we had more applications. We had to interview more high quality startups. And then we finalized 4 startups, two of whom took on 2 challenge statements. So in the end, we had 6 proof of concepts completed. For the third cohort, we went back and we analyzed, we launched 10 challenge statements each time, but we were only able to complete 6 proof of concepts, right? So there's something missing. For 3 or 4 of these challenge statements, we weren't able to find the right fit between a startup, what startup had to offer, and what our requirement was. At the same time, the feedback we got from our businesses is that we need more solutions for challenges that we are facing immediately, right? So these are not just challenge statements that we're looking to solve in 3 to 5 year timelines, more challenge statements that we're looking to solve immediately, right? Could be price discovery, market discovery, increasing reach within the market. These are kind of challenge statements that the businesses were interested in looking at. So in November of last year, we launched the third cohort. This time we have 12 challenge statements. And this time it includes both technical topics as well as business and commercial related topics. We have 2 separate tracks, one for construction and the other is for HPS, our high performance solutions, which is emerging technologies and all things digital. And over the last 3 years, we've got Link Innovation, who's been our scouting partner, fantastic team who have helped us connect with an amazing set of startups over the last 2.5 years now. So we're happy to bring them back as our partner for the third cohort. But we also brought in Brigade REAP to come in as a scouting partner, especially for construction-related challenge statements. Great team at Brigade REAP, if any of you have already worked with them. Where we're currently standing is we've identified startups. In many cases, we've evaluated startups for each of these 12 challenge statements. So it takes some time to roughly 12 times 4 to 6, so about 60 startups. It takes some time to evaluate all of them and agree on which one we want to partner with, or if there's more than one that we want to partner with. We also have MathWorks, who's come on board to offer their full suite of products for all our startups in our challenge, the Open Innovation Program, the third cohort. Right. We look back and we try to identify a few success factors. What has gone right for the cases in which we had great POCs, and then there was a strong interest from the business as well. And we're now in the process of identifying commercial opportunities, right? We ask these questions, and I've listed a few factors here, some green flags. To start with, a great founding team with a clear vision. I think that's really important, where the founding team, not just in terms of their educational background, where they worked before, have they had a startup before, all of that is fine. It's important, but also how clear of a vision they have for what they want to do. Are they solving something new and path breaking, or are they doing what 20 other startups are doing? And even if they're doing something that 20 other startups are doing, do they have a strong IP, and do they have a strong technical differentiator that will set them apart from these 20 other competitors? It's also important that the startup is looking for strategic partnerships, not just for investment from an organization like ourselves. And they also have clear expectations from the partnerships, right? Very often we have startups who come to us and they say, we want to partner with Saint Gobain, but they don't know exactly, they don't have much of an idea on what exactly they want from the partnership, right? The only thing that's drawing them to the partnership is the possibility of the investment. So from experience, great collaborations we've had go beyond the investment aspect and ask the question of what can we get from this partnership with this organization. Great collaborations with startups. Also, we've seen that the founders are willing to constantly adapt to the situation. We start with one challenge statement, but a few weeks, a month down the line, situation changes, and the business says that, okay, initially this is what we thought we wanted, but now we realize that the scope has changed. And the startup founders, the ones who have been successful, most of them are willing to adapt to that situation and say, okay, that's fine with us. But we'll work with that, right? Most good collaborations are in it for the long term. They don't look at a short term, by being part of this, I'm getting more visibility, or being part of this will help me attract more VC folks. They're in it for the long term, which means that they're looking at a 5 to 7 year horizon of building something together with Saint Gobain. And the last success factor is referrals. So we take referrals very seriously, which is why we spend so much time in building and cultivating our network of partners. A referral from one of our partners holds a lot of value. Not to say that, if you're a startup and you come to us directly, we won't take you seriously. Of course we do. But when a referral comes to us from one of our partners, a VC or an incubator, an accelerator, university, we take them quite seriously and say, okay, what can we do to make this happen, right? So some success factors. I'll maybe shift gears a little bit and talk about how startups can leverage strategic partnerships, right? So far, I've talked about what strategic investments are, and how CVCs look and scout for startups. I've given you some factors, but what would a good collaboration look like from the startup perspective? So we've had, we've developed a sort of framework for partnering with corporates. It also always starts with culture, right? Now, I'm not just talking about partnering with Saint Gobain. As a sort of general rule, if you're partnering with a large organization, it's good to look at what is the culture of the organization. Are they open-minded? Are they open to collaboration? Are the stakeholders aligned to to collaborating with a startup or anyone from outside, right? From that culture comes the input. What are the strategic themes? What is really this organization trying to achieve out of this? Is it just another sort of a feel-good program where you can create posts and brag about speaking to X number of startups, or do they have a deeper reaching agenda where they want to do deeper work with startups and create these opportunities where everyone can grow, right? And for that, you need a strong program management. I don't have metrics for these things. Many of them tend to be intangible, but as a startup founder, if you're looking to engage with a corporate, these are things that you definitely have to keep your eyes open for. What kind of process does the corporate follow? What are the kind of engagement models they follow? What are the ecosystems that they play in? Do they have an active corporate venture program? What are some examples of pilot projects that they've completed in the past? More and more corporates are getting into open innovation. So often you'll see that they don't have a history of working with startups. There it becomes maybe a little judge these things, but right. And then the output, are you looking to build new tech? Are you looking to explore a new business model? Are you looking to get into an emerging market? Are you looking to increase efficiency? These are the kind of things, these are the aspects that you'll have to question yourself about when engaging with a large corporate. And of course, the most important, the bottom line that you see there, the bottom arrow, is continuous communication, right? They're constantly communicating with you, if they see that there is no possibility for collaboration, then they inform you immediately, right? So they don't let you keep hanging around for too long, pinning your hopes on something that might or might not happen, right? So this is the sort of framework for startups who want to engage with corporates. And so I went back and looked at what would an ideal collaboration look like from the startup perspective, right? So if I were a startup founder, how would I approach a collaboration, and what would it look like if everything went well and things planned out well, right? In terms of new technologies, the question you need to ask yourself is, do we need to do all our R&D alone, right? Can you leverage your partnership with a large organization, and what would be the outcome is a technical capability beyond what you currently do, right? If the entire collaboration revolves around a transactional model where you have something, there's a need for that in the organization, and they pay you X amount and you help them solve the problem, it stagnates very quickly after that, right? So there's no growth after that. You should be looking at what can you develop beyond what you currently do, even if it means that you have to stretch your technical capabilities a little bit outside of what you currently do. This could open up a lot of doors that you didn't know even existed, right? Of course, you have to be judicial about choosing these opportunities in terms of new technologies. In terms of new business models, there's a lot of things happening in the markets at any given point of time. You as a startup will have to explore how you want to be part of that game and what you want to learn and how quickly you can learn. An engagement with a corporate will allow you to explore new services that you hadn't thought of, new channels that you might not have explored. You could probably look at digital platforms or prescription, right? It's quite common in the SaaS-led business models for these type of concepts. But let's say you're in pharma, health tech, defense tech, looking at how you can explore these new channels could be very interesting for many startups. In terms of emerging markets, how can you as a startup bring the right products and solutions to markets that are still emerging? Your customers might not even know that they need this product. Can you develop products that you want to sell to other players later? And essentially, as an outcome, you want to look at can you find a new product market fit, or can you validate your existing product market fit? Can you sort of poke holes and see if your product can sell in different markets and under different conditions, different geographies, right? A partnership with a large organization will allow you to explore these options. And last is increasing efficiency. How can we achieve greater productivity? But a sort of caveat here that I'd like to put is you need to identify best practices, but only the ones that don't compromise on your agility, right? The minute you see that it's compromising your agility, it's compromising your ability to act fast, I think it's that efficiency is not worth pursuing, right? Something could increase efficiency if you put a detailed sort of structured plan around it. But if it means that you can't react quickly to the changing circumstances in the markets, in the industry, it doesn't, I mean, it's a very heavy price to pay for an increase in efficiency. Right. And the last topic I have for today is I don't claim to know everything about what's going to happen in open innovation, much less in India. But I want to put a few points on what I foresee happening. I might be completely wrong about this. But again, I'd like to share a few points on what the future of open innovation in India could look like. Some of these could be, partly my wish list as well, right? So I take this diagram from Sundar and Sarvana Mani's Open Innovation Playbook. If you don't have a copy of it, I highly recommend you get a copy for yourself. It really sets the foundation for how startups and corporates engage, the ins and outs. So again, going back to what I started with, an open innovation program is built on the foundations of collaboration and co-creation. If there's any other motive, then you should be wary of it, right? It must reflect the strategic priorities of the organization. If it's just a feel-good exercise, you're better off not engaging with this program. You need a strong program management to orchestrate the synergies between yourself, the startup, and the corporate. Very often, what happens is, a corporate will have a program like this, and a startup will enter the sort of corporate, the inside of the corporate, and they'll float around aimlessly, being bounced from one department to the other, much like aimlessly going around and trying to figure out basically what they're trying to do is sell their solution a second time to people inside a corporate, right? So complete not a great use of your time at all. So if you have great program management, what that will do is it will identify what you're best at doing and try to match you as quickly as possible to a need within the corporate, and then get things going very quickly, right? And at the same time, they will also say that, we don't find an opportunity, maybe we keep you on hold. If you have any other needs, if you'd like us to connect with any of our ecosystem partners, that's something that we're willing to do, right? So that for me talks about great program management. The third pillar is strong sponsors and champions. I've seen this more times than not that you could have a strong motivation to engage with startups. You could have a clear program, but if you don't have strong sponsors and champions within the organization, if you can't identify these, then the whole program falls through, right? Program management can only do so much to push a startup and the idea that it's proposing within the organization. But if you don't have a sponsor and a champion who say that we're willing to take a bet on this startup, we want, it's slightly riskier than what we usually do, what we typically do, but we're willing to take a bet on this startup, not in terms of an investment, but in terms of the time spent and the effort spent engaging with the startup. We're willing to take a chance on this startup. When you have strong sponsors and champions like that, it makes everything a whole lot easier, right? So you need to identify these sponsors and champions. And lastly, again, a robust network of partners to navigate the open innovation journey. The more number of partners that you engage with, the higher your chances are you land a great collaboration opportunity, and which will eventually lead to an investment opportunity, right? So some factors on what on where I see a lot of work is going on, and a lot more work will happen in the open innovation in India, right? Going forward, what I foresee is more organizations will continue to leverage partnerships with startups. More and more large organizations are seeing the value of engaging with startups. They clearly see the agility and the speed that startups bring, the kind of, for lack of a better term, I'll use the cliche of thinking outside the box, right? So the kind of innovation that comes from startups. Um, Really more and more large corporates will want to capitalize on that, right? Um, Collaborations will come into focus, and going forward, it might take priority over corporate investments, because corporate investments, unlike traditional venture capital, tend to be smaller in quantity, right? The corporate might not invest as much as a traditional VC would. They have smaller stakes. But to quote from our own program, more than a return on investment, we look at it as a return on innovation, right? That's the approach that we take. We will give a startup more in terms of access to our data, access to our sales channel, helping, handholding, validating the solution when we enter into a collaboration, than we can if we invested in the startup, right? Yeah. Some sectors that I see will come into sharp focus over the next few years are defense, health, energy, and mobility. You'll start seeing a higher proportion of partnerships in these areas between corporates and startups. Not to say that partnerships would happen in other areas. Today we're talking about built environment. I personally hope to see a lot of collaborations within the built environment, or the solutions for the built environments. But these four areas, defense, health, energy, and mobility, I foresee that there will be a lot more partnerships compared to traditional areas like the built environment, construction technology, right? And last point, open innovation platforms will play a key role. What I mean by open innovation platforms are exactly the program that we're part of today, the Avaana Capital Startup Grand Challenge. We need a platform which connects people, ideas, and capital, and this is exactly what a platform like this Grand Challenge does. Right? It brings in stakeholders from all the different areas, puts them in one place, and says, okay, what's the best outcome we can get from this program, right? Right. So that's all I had for today. Thank you for listening patiently. I'll stop sharing my screen, and happy to answer any questions.
Great. Thank you so much, Tejas, for highlighting the importance of partnerships and collaboration, as well as corporate VC scouting strategies, framework for partnering with corporates, and success factors in terms of founding team, clarity of vision, strong technology, etc., and how these elements are key to inspiring partnership confidence as well. I think for the next segment of a masterclass, we'll end up doing a question and answer. So there are some questions that we've already collated from the Google form that we've circulated. And I'll request the rest of the participants to please put in your questions on the chat box here, and I'll take them up for you. So I think it is one of the first questions that we have is, what are some of the white space areas in the built environment that, Saint Gobain is most excited about?
Correct. So I think in terms of white space, we're looking at, we have been looking at how we can make cement and concrete green. We've had a lot of work and a lot of papers and a lot of IP being filed around the use of graphene. So any sort of additive that improves the qualities of cement and concrete, that's something that we're highly excited about. Circularity is another area which is sort of wide open for us. We do a lot of work. We engage with a lot of startups who process biomaterials and could act as sort of a replacement for virgin materials that we currently use. So closing the loop, that's quite high up on our agenda. We focus on that at a plant level as well. We've got sustainability initiatives at many of our plants.
Got it. Okay. I think the second question, I'll take it from the chat. What is the ideal startup profile in terms of stage? Is it pre-seed, seed, series A, etc.? First of a kind versus nth of a kind?
Um, So ideal stage would be, I think, pre-series A. Someone who has some sort of funding. They have I mean, they could be pre-revenue. It doesn't matter, but they've got some validation from the market for the solution. If they have some investors on board, some grants, some IP already filed, that would be a good stage for us to engage with. Anything earlier than that would be difficult for us to handhold because it takes a longer time. We do have an academic partnerships program. We have partnerships with a lot of universities, but that's a slower program in terms of startup growth. In terms of engaging with the startup ecosystem, so to say, pre-series A, series A would be great. If you're looking for funding, again, that's the kind of profile that we're looking at. Between first of a kind, nth of a kind, of course, we prefer first of a kind if we're lucky enough to find those. Not always lucky enough, but we do look at nth of a kind startups, and that's where I say that if you have a clear technical differentiator, we definitely want to engage with a startup. So no questions about that.
Great. Thank you so much, Tejas. That's extremely helpful. I think the other question is, could you share some particular examples of successful startup partnerships with Noah by Saint Gobain and what made them work?
Correct. So I'll talk about the two investments that we've made in India. The first is LiveSpace, and so I think we invested in them slightly later than we typically would. I think they were already in Series C. But what that did is, for us, it opened up a digital channel for sales of many of our products. It also opened up opportunities for LiveSpace to source leads from our sales networks, right? So that worked really well. Of course, the LiveSpace has many other investors, but we continuously look at improving the quality of our leads, improving our understanding of what trends are currently active in the market. Everything from is a certain model of a shower cubicle more in demand than the other, right? So it could be something as simple as that, and LiveSpace will come back and tell us that there's no demand for this sort of model. You need to change it. You need to change X, Y, Z. That's the first example. The second example is the other startup we've invested in is Twasta. They're an IIT Madras incubated startup. They make 3D printed concrete structures. So we engage with them to develop admixtures. It's been great to see them grow from strength to strength. They're now expanded beyond India. They're very active in the Middle East and in the US. If you do a quick search for Twasta and you look up Google News, you'll see that they're expanding quite well in other geographies outside of India as well, right? For us, it gave us an entry point into 3D printing. For us, it was a new technology, a new area that was developing. We wanted to see how we can develop products for this new area. So Twasta has been a great partner for us there.
Okay. I think there is this particular question about how built environment startups are finding it extremely hard to find adoption. So what is your advice on that?
I mean, it's the same as other deep tech. There's a need for patient capital, and aside from patient capital, what we can also offer is working with the startup long term. This is where I kept stressing about long-term partnerships, partners in progress, moving away from a traditional transactional vendor-based relationship. I think that's what we will help adoption. It takes time. Take 3D printing, for example. Swasta started with a great concept, but they're only now finding traction and they're getting larger and larger projects. There was a lean period in between where they were looking at things like bus shelters and lawn furniture and those sort of that segment. The vision they set up for themselves is revolutionize the built environment. They were not looking for bus shelters, right? So it takes some time to adopt these new technologies. That's where I think a partner like Saint Gobain can help.
Got it. And Tejas, how are you seeing AI fit into the whole built environment narrative?
So every time I meet a startup, I'm almost praying that they don't mention the word AI because now every other startup wants to slap AI badge on what they're doing and with the hope that we'll either engage with them or invest in them. So very often, it seems like a forced fit, but not all the cases. There are, a great set of startups who are leveraging AI for solutions in the built environment, right? So, things like visualization of our solutions. The great set of startups that who are using AI to make this happen. Um, Things like price discovery, things like market reach. These could be some really interesting aspects where there could be genuine use of AI. Otherwise, it's just a force fit.
Got it. Okay. I think I have one last question on my end, which is, you particularly spoke about the open innovation landscape and even Grand Challenge being a part of that. How are you seeing the entire open innovation landscape evolving in India, particularly for the built environment sector?
It's still small. So anyone who's building solutions for the built environment, I'm sure you're aware of C Tribe. It's a small group of startup founders. It's growing quite quickly, very active. If you don't know who C Tribe are, again, please go on LinkedIn or Google, search for C Tribe in India. They do some fantastic work. We need more of these sort of network connectors, right? Places and events where stakeholders from different aspects can meet and see what the best way to go forward. Without these network connectors, I don't see open innovation going very far. So network connectors are key, are crucial. And the fact that someone like Avaana Capital has taken up this role makes me so happy. We need more of these sort of events. Built environment is really exciting in India. A lot of great founders with great solutions. A lot more work to be done. It's sort of wide open. I wouldn't call it the Wild West, but it's a very exciting space to be in India right now.
Great, got it. Thank you so much, Tejas. Thank you everybody for joining today's masterclass. A special thank you to you, Tejas, for an insightful session on decoding the corporate venture capital perspective of solutions for the built environment in India. I would also like to thank all our participants for your active engagement, for sending in questions, and we hope you leave today's session with actionable strategies to take your venture to the next level. We encourage you to apply for the Avaana-Startup India Niti Aayog Atal Innovation Mission Grand Challenge for climate-tech innovation and continue innovating for a sustainable future. Thank you, and we look forward to seeing you at our future events.
Thanks so much, Srishti. Thank you, everyone.
Thank you, Feroz.